Hey everyone, and welcome back to another video for today. So a week from today, a week from Friday, SoFi will report its Q4 earnings. We'll have the earnings call as well, all before the market opens. It's a weird one because it is on a Friday. There aren't that many companies that report on Friday, to be honest. So we'll see how that goes. We're of course going to cover that live on the channel. Maybe we'll collab with some other SoFi investors as well. And so as always, we do a little prediction video, which is exactly what we're going to do in this video. So do leave your predictions down in the comment section below. Now, SoFi year to date is already down 5.9%. To me, that's not a problem because that means we're going into an earnings report where expectations are at least a little bit lower. And so that would mean that if we get the usual triple beat for SoFi, the stock could bounce back quite aggressively, for sure.
For sure.
Now, over the past 12 months, SoFi is still up 43.3%. It's a company worth close to $33 billion. So it's not like we've had a bad time with SoFi, especially not over the last 3 years. Thing is up 340%. Over the past 6 months, it's up close to 20%. Over the past 3 months, it is down 8%, but a lot of these high-flying names have come down, have stabilized over the past couple of months, which again is quite good because you would like to see the fundamentals catch up. You don't want this thing to go up and up and up and up and up, and then the business will always have to be catching up. Because then you're getting into a case where, okay, you like the name, but it is a bit stretched, so the crash, the correction is going to happen. Now, there's no crash or correction really happening here with SoFi, just that the stock has been a bit stable for the last couple of months, which to me is fine, especially for those that want to continue to accumulate more and more shares. So let's dive right into this. If you enjoy this type of videos, of course, hit all the buttons, click the notification bell so you don't miss any of the future videos, especially not during this earnings season. And if you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, let's start off, and again, apologies for the contrast, but it is what it is. Let's start off here with the fiscal year 2025 guidance that was given. We were not really given any Q4 guidance. We will look at what the market is expecting, but let me first make my own case here. So this is basically what we got. Of course, guidance has been raised along the way, which was a given because, as we remember, 3 months ago, I made a video again, the same prediction video, and I said, the numbers here don't make any sense. They are way too low. And so they've been revised up, of course. Now, if we see the updated fiscal year 2025 guidance, $3.54 billion for adjusted net revenue, 36% year-over-year growth. Member growth of at least 3.5 million, or approximately 34% year-over-year growth from 2024 levels. And so this is the number we already have, and this is what we should be reaching, which means we should be getting approximately 1 million members this quarter. Then as for adjusted revenue, in Q1, we've had 770 million, then 858, and then 950 million 3 months ago, which means we should be getting at least $962 million for this quarter. Same for EPS, we've had 6 cents, 8 cents, 11 cents, and so to meet this number right here, 37 cents, we should be getting around 12 cents for Q4. Seems feasible, right? Because, as you remember, last quarter we've had the same case here. Adjusted net revenue, a record quarter. Adjusted EBITDA, a record quarter. Fee-based revenue, record quarter. Same for member growth and same for product growth. All records for the quarter, and management, of course, raised 2025 guidance. And so my prediction is as follows. I did have to update real quick one range here, which is the members one. Base case or base bear case would be 950,000 because I just showed you that we need close to 1 million new members to reach the target that was set. Then a bit more bullish is 1 million. Cost of acquisition will be around $310 or so. You basically look at the amount of members and the amount of sales and marketing, and you reach that number. As for Galileo revenue, I'm looking at $118 million, which is a slight increase quarter over quarter. Adjusted revenue around $990 million. Again, base case, bullish case would be just above $1 billion. Adjusted EBITDA $297 million. Of course, if adjusted revenue is a bit higher, then this number will be a bit higher as well. I am putting here a 30% margin. I'm putting here 15% margin for net income margin, which means $158.5 million or $150 million if we do get adjusted revenue of around $1 billion, which means EPS will be between 12 to 13 cents. Those are my predictions. Now, previously, I've been quite conservative with the numbers. I've always come in a little bit lower, although with the customer acquisition cost, which to me is fine. I don't need to be super aggressive just to sound extremely bullish and then look like a complete idiot when it is much lower. So I put it at these numbers right here, and then we'll see. We'll see what happens for 2026, but I would still be very happy with these numbers because this would mean beats across the board. Now, what do I want to hear from management? Well, of course, some information on crypto and options, momentum that they're seeing, usage-based, things like that would be great. More info, of course, on SoFi Pay and the SoFi stablecoin. Are we getting more and more attention to those products? Some momentum internally, externally, that would be great. SoFi Invest monetization strategy, how will they make sure that SoFi Invest really becomes something that is extremely profitable for them? They've talked about how under-monetized SoFi Invest is, so let's hear them talk about that. Unaided brand awareness, are we well above 10? Well above. Are we above 10%? Yes or no? The view on 2026, we already have, of course, I'll talk about that in a second, the EPS number. SoFi Plus situation, right? The membership fee, why certain accounts are getting emails that they're going to have to pay a little bit more. But hey, SoFi Plus, momentum subscription product. I think some comments on that would be great. Then the usual credit performance and personal loans delinquencies. If everything's still fine, then I guess that there are really no issues. As for 2026, we know that GAAP EPS, 55 cents to 80 cents, was the previous target that was given to us. We also know that the low end is the target because of the investments that are being made. These were comments from Chris, CFO of SoFi, I think a month and a half or so ago during an analyst talk. Now, we know that they are playing the conservative game here. So it's between 55 and 80 cents. It's probably going to be closer to the 80 cents than the 55 cents, unless something drastically changes. Then don't forget, they talked about sustained compound annual EPS growth of 20 to 25% for the foreseeable future. Is that still the case? Are we going to hear maybe some 27, 28 guidance, right? The midterm guidance? Maybe. Well, hopefully, the more information, the better. And so what are we expected to see? We're expected to see, I would say, another 34% or so year-over-year growth for members. What are we expecting? What I'm expecting, around 80% year-over-year growth here for financial services. That would mean $461 million, give or take. 20% year-over-year growth here in lending would bring us to $501 million. Again, approximate pretty conservative numbers. And then 15% year-over-year growth for the tech platform. That's $118 million, which would mean, again, a small reacceleration in growth. But 2 quarters ago, that 15% year-over-year growth was, of course, on top of a pretty weak 8.9% quarter. The one that we had 3 months ago, 11.7% year-over-year growth, was on top of a 14% quarter. And now the December one is just lapping a 6.1% growth quarter in 2024, which is probably why I'm putting this at 15%. Now, this is without the Chime impact, so it might be a bit higher, but hey, I'm putting these numbers as normal and neutral as possible. As for the technology platform accounts, you can clearly see that the growth rates here have been coming down. Last quarter was actually negative. I do expect that to, again, rebound a tiny bit. 2026 is supposed to be a pretty positive year finally for Galileo, the tech platform. We'll, of course, want to hear a little bit more about that during the earnings call. And don't forget, once the earnings season is starting, a lot of these companies will report the quarterly figures, and then they'll go and talk to analysts, right? I think 3 analyst conferences are scheduled every time here, so we'll get every time more and more information over the next month and a half. As for what the analysts are expecting, they are expecting $985 million in revenue for SoFi this quarter. As for EPS, they're looking at 12 cents, so pretty close here. For EBITDA, we're looking at $308 million and EBIT $183 million. Looking at the stock right now, you can clearly see that we've been around this area right here, which has served as a sort of a bottom, right? An area where the stock has always found some support here at around $25, $26 or so. We've been here since, let's call it September. We've of course been higher, we've been a little bit lower, but this area right here has served us quite well. This is on the weekly. If you look at the daily, we are under the 150-day moving average. If you wonder what happens if we do crash and go revisit the 200-day moving average, we will have to go down by around 12.4%. If we were to go up, which I do think we will, but then again, I could be wrong. Let's say we go up by 10%, we go back above the other moving averages and pretty close to $28, $28.5. RSI is quite neutral right now. Now, at the time of recording this video on Friday, we can see that a lot of the names are actually green. Some of the names that are red are, of course, is Intel. Intel reported Thursday after the market closes. I will do a quick recap of earnings for Intel during the portfolio update on Sunday. I won't do a specific video on that, but that one is down 16.4%. Then all the rest not down that much. Neoclouds have been rebounding a tiny bit, so all of them are green. Fintech names are a bit split here, 50-50 or 60-40, red and green. As for the semiconductors, same thing here, 50-50 red-green, and big tech is mostly green. And so all in all, that's about it for me in this video. Again, do let me know what you think SoFi will report next week. 7 days from today, we will already have the report. Leave it down in the comment section below. That way we can maybe look at it a week from now while I review all of the figures. Would be very, very interesting. Are you going to buy before the earnings? Not selling, maybe options play? Let me know as well in the comment section below. See you all in the next one and have a great weekend.